The problem with the sell-off this morning is that we need to get back above that 20-day moving average here pretty quickly if we're going to hold this trend that we've been in. So let's talk about what you need to know before the bell this morning. On Friday, we had this very sharp down candle, as you can see here, and that took us right to the 50-day moving average. Now, the good news is that yesterday buyers showed up and they bought the dip at the 50-day moving average. So that is good news. And so the market rallied nicely yesterday, coming off that test of the 50-day moving average. So we now have an initial test of the 50-day moving average. Here's the things we're watching for today. Markets are looking to open down this morning. Now, the reason this is important is that we tested the 20-day moving average from beneath yesterday. So we broke the 20-day moving average, which has been this running trend line that we've seen here for the last several months. And again, as we were talking about just on Thursday, Thursday or Friday morning, Thursday morning, we were talking about this, is that if you take a look, this market is, and I'd said that this market has just been kind of consistently kind of testing these 20-day moving averages this whole way, and every time the 20-day moving average was bought until Friday. And on Friday, we broke that trend of support at the 20-day moving average. So now we're testing the 20-day moving average from underneath. So the problem with the sell-off this morning is that we need to get back above that 20-day moving average here pretty quickly if we're going to hold this trend that we've been in. If we don't, and the market sells off today and we wind up taking out this 50-day moving average, there is some support right below this, but we're going to be talking about the 100-day moving average, which is currently right around 6,300, 6,310. And then below that, we don't want to be talking just yet about the 200-day moving average, which is closer to 6,000. So there is some decent downside risk here that you do need to be paying attention to. And we saw a lot of that selling pressure in AI-related stocks on Friday. Of course, those have also been some of the biggest beneficiaries of this recent rally, particularly in the smaller and mid-cap space. We've seen a lot of money piling into those areas, and that's been a really, really good trade. But again, a lot of those stocks are really overbought, very extended. We saw a bunch of money coming back into those types of stocks yesterday, Oklo, Applied Technologies, etc. Those had really big rallies yesterday. But again, that was kind of a reflex trade here. Retail investors stepping in, buying those same type of stocks over and over again. It's like, oh yeah, I buy this every time it dips and it goes back up. That may be working right now. We'll see if that carries through. But again, if we fail to get back above this 20-day moving average by Friday, we're going to run a bigger risk of coming down and testing that 50-day, potentially breaking that 50-day moving average. And that's going to set up a little bit of a different environment here for a shorter term correction, where, again, we've talked about previously this kind of 3 to 5 to 7% correction would not be a surprise. And that would certainly get us down here at least to the 100-day moving average. And that would be kind of that initial kind of test zone for a reset. But again, pay attention to this. Now, the good news sort of behind all this is that, we had this very big overbought condition in the markets. That was all reversed on Friday. So we worked off a lot of overbought conditions on Friday, rallied a bit back yesterday, still on a MACD sell signal here at a fairly high level. So again, there is still some pressure on the overall markets, but again, that kind of clearing process on Friday, we saw a lot of liquidation kind of across the board in stocks and Bitcoin in particular. Lots of liquidation there. Took out in Bitcoin in particular, you took out every stop loss in Bitcoin. And particularly when you get into the altcoins that were kind of trading very kind of on a very speculative basis, a lot of those went to zero on Friday initially. So again, you just saw a complete wipeout. Margin, a lot of that margin leverage was taken out. A lot of all the stop losses were cleared out on Friday. So again, you saw just a big reversal there in kind of the crypto world. So again, we'll see what happens here. But again, just be a little bit cautious here. We were talking here over the last couple of weeks, take profits, rebalance risk, blah, blah, blah. We've just kind of been saying that for a while. It's like, yeah, we hear you, Lance. We hear you take risks, take profits. Yeah. This is why. Because this happens. And this is why you want to manage that risk. And again, we're not through this just yet. We had that initial sell-off. We had the initial reflex rally. The question is what happens next, and we'll kind of be watching that over the course of this week. Again, markets are going to open lower this morning, and so we'll kind of see how this plays out today. it's going to be led today on the sell-off by those same stocks that were leading on Friday as well, kind of in that same technology space. So again, just be a little bit cautious here, but that's what you need to know before the bell this morning.